let's look at today. Today was a crazy day, tremendous amount of volatility, and I was really expecting this. You know, people who were not able to hold, they were going to have the weekend to maybe think about what they wanted to do. A lot of them probably sold off and said, you know what, it's time to sell. I don't want to be in this. I want to take whatever money I made, or I want to take the little losses that I lost and just make my way. You know, I'm out of here. So that's probably what we saw here. And this is why throughout the morning we saw all these sell orders just kind of go through. And we do see this is my portfolio here. But we see that a lot of this here, right? A lot of selling going on. And we see at a point at 7:15 in the morning, my portfolio was down $675. It did recover a little bit by 7:50, but then at 9:15 in the morning, it was down $712. Now, here's the important part, right? I'm not gonna lie, I was nervous as heck when I looked at my portfolio and I was like, what is going on? You know, this can't be true. I had never, my portfolio has never been down $700 in a day. You know, in crypto it has, but that's crypto. But in my stock portfolio, you know, last week I think I lost like $500 one day. That was the most. But $700, that was a whole new territory, right? This is something that's never happened in my portfolio. I was nervous. I was like, what did I do? What the heck is going on? But there was a nice bounce, and that's the good thing here. So check this out. Nice bounce. We went up, and we actually ended up the day at a positive $177. So instead of losing $700, we made $177 today, which was really good. Now, why I think this is important, I think this kind of shows what a correction, what a short-term bear market, whatever you want to call it, can look like. When there's a bounce, it's going to be aggressive, and you don't want to miss that bounce, right? You definitely do not want to miss that bounce, because if you miss that bounce, you're going to miss on a lot of the gains. You're going to miss on a lot of the upside, which is probably what happened to a lot of people here. I'm positive a lot of people saw this and, you know, they were down here and they said, I'm out. You know, they couldn't handle it. And so they decided to sell, and well, look at what they lost here. They lost all this upside. And in order to make this upside here, it's going to take them forever. A really good few hours. And if you miss those few hours, I'm sorry, because you lost a lot of gains. So that's why I really believe in this here. Time in the market, not timing, is what matters. So I really do believe that it's the amount of time that you hold your investment, not that you go in there and time it. Hey, if you were able to time this dip, awesome for you, right? I do know that one of my subscribers said that he was able to time it. Awesome for you, dude. That is super, super cool that you were able to time it. Now you have some cash and you are ready to purchase on deck, right? So that was really cool. Knowing when to invest, however, isn't as important as to how long you stay invested. So I think this is really, really true. This is something that I am following not only in my crypto, but also with my stocks. You know, my crypto, the longer that I hold, the more interest that I gain and whatnot, the more that I get paid for holding, you know, the more that it's compounding and all that. Same thing goes for my stock portfolio. The longer that I have, the more dividends that I get from companies like StarBucks, the more options that I get to play, and the more premium that I get to collect. So I'll have that just compounding time after time after time, right? So the longer I'm in the market, the more money I should have. Okay, now let's look what I have for this week, the options that I'm playing for this week. I do want to show you guys, I want to give you guys full transparency as to what's going on in this portfolio. So I do want to be giving you guys weekly updates. If you guys enjoy these weekly updates, go ahead and give me a thumbs up down below. If you don't like these weekly updates, also let me know. I don't want to be putting out content that you guys don't enjoy. So just let me know down below if you guys enjoy it or not. I would greatly appreciate that. So for Robinhood, you do see that I have a put and I kind of have a call here. So a $16 call and a $12 put. This is kind of my own version of the Iron Condor. If you don't know what an Iron Condor, go do some research. It's pretty cool. I'm doing my own version of the Iron Condor, right? So if Robinhood ends in between $12 and $16 by Friday, I pretty much won both trades. So that's pretty good there. So let's look at this one here. This one here did pay me, I believe, around $49. Yeah, so they paid me $49 for this one. I get to keep those $49, do whatever I want with those $49. So I was able to keep those $49. If Robinhood ends under $16 by Friday, then I will be able to keep my 100 shares of Robinhood and not have to sell them at $16 each. If they go over $16, then I will have to sell all 100 shares of Robinhood for $16 each, no matter what price they end up at. Then we have a $12 put for Robinhood here. And this one, I believe they paid me 24 bucks for it. So now it's worth a lot more, as we can see here, because volatility really picked up, right? So volatility really picked up on these puts. So by Friday, if Robinhood is below $12, I will have to purchase 100 shares of Robinhood at $12. I don't really mind purchasing 100 shares of Robinhood at $12. I think that's a really good price. If I do end up purchasing them, hey, whatever. I don't really mind purchasing them at $12. I think $12 is a great price for Robinhood. Now let's look at Lucid here, which is a $36 put. I was paid, I believe, $102 for it. So if Lucid ends at $36 or below, I will have to purchase 100 shares of Lucid. So let's look at the graph, what it's looking like. Right now it's at $37.43. So hopefully it ends up, I'm thinking that it'll end somewhere around here by Friday. So around $36 and the 30-cent range. It might end a little bit below, so maybe around here. Hopefully this plays out. Again, I don't have a crystal ball. I don't know what's going to happen, but I think today was going to be the most, volatile day. And we did see it at a point go down to $34.37. But again, that's okay because I do have $200 kind of leeway with Lucid. So Lucid can go all the way down to $34 and I'll still be in profits, right? So by the way, in Robinhood, we're still down about $200 with Robinhood. So that's kind of a bummer. With Lucid, we're getting these nice premiums and they are giving us a lot of leeway. So I'm really liking what I did here with Lucid. So I think moving forward, if I do pick another stock, this is probably what I'm going to do. I'm going to pick a few weeks where I do things that are not going to get filled and I still get to collect those nice premiums, and those premiums are going to give me a lot of leeway moving forward, right? So I think that's what I'll do in the future. I do like what I did here with Lucid, so I really like that here, right? And maybe my next stock will be SoFi. We do see that I have a few dollars there built up and sort of as leeway, right? That's kind of what I'm calling them, kind of like bounce area, right? Area that I can money that I can look for if I am losing money. I could kind of look at this here and say, well, hey, remember a few weeks ago I made this, so I haven't really lost money. But if we look at Starbucks here, we are down quite a bit. Our cost basis is down to $102.29. If we look at Starbucks here, they're pretty much at $98, so we have lost about $400. I know that this says over here $629, but we have collected a few premiums. So we're actually down to pretty much down around $400. The thing that's a really big bummer here is that this was the one that I was the most confident in, which is why I was willing to put up a lot of money. Stock doesn't care how confident you are in it, right? Neither does the stock market because it shows you here that anything can happen, right? So always be aware of that. Another thing that I have in mind moving forward with Starbucks is that I know that the dividend date, the ex-dividend date, is coming in February 11th. So I'm keeping that in the back of my mind. The week of February 11th, I'm going to play it very safe. I'm either going to do a really out of the money call. So for example, if we look at Robinhood here, maybe let's say for the week of the 11th, I'm going to do sell a call. I'm going to do something that's very out of the money, right? So for example, here we go, the 11th. Let's say that Starbucks is at $105 by then. What I'm going to do then is I'm probably going to go really out of the money, like 114, right? If I end up selling them, whatever, I don't really mind because it's so out of the money that I wouldn't mind taking the profits, right? So that's probably what I'm going to do for the ex-dividend date, something very out of the money that it's going to pay me maybe like $8, $10, whatever. Another thing that I do want you guys to notice is that the premiums on Starbucks are going up, right? So this is really good. This means that people are expecting Starbucks to go up in price. And I think that it's taking into account the ex-dividend date. People are taking into account the ex-dividend date. If we notice here, the 11th, let's look at the 105 here, is up to $93 on the 4th. Maybe check out Starbucks, see what you guys, if you guys want to collect a quick dividend, maybe do a few calls on them or whatever. I do think it's looking quite nice. At least that's what the premiums are telling me. You know, calls get more expensive as more and more people believe that the stock is going to go up. So that's kind of what I see going on here with StarBucks. Today, I also went ahead and I purchased a little bit of the dip. I did transfer a little bit of money that I was able to put into my account. I was able to purchase, I believe, 1 share of XYLG, 1 share of QYLD at around $19. I had never seen it at $19, so I definitely took advantage of that. And I purchased just 1 share. I didn't have that much money, right? RYLD, I purchased 1 share also at a really low price. And I was also able to snag up 1 share of JEPI at around $59.20 something cents, I believe. So those were really good prices for me. I felt really good, you know, finally being able to purchase a little bit of the dip. So I was able to do that with these companies here. So moving forward, what I'm going to do is I'm going to build up my money on using QYLD, RYLD. Once I'm ready, once I have enough money into these here, I will probably cash out some of that and move on to my next stock, which is probably going to be Apple. So that'll probably be the next one. All right, guys, so that was it for today's video. If you enjoyed this content, go ahead and give me a big thumbs up down below. Don't forget that every 50 subscribers, we are still doing our free Voyager hoodies. If you haven't yet subscribed, go ahead, do me a big favor and hit that subscribe button. All right, guys, like I like to say, let's go to the moon together, and I'll catch you guys on the next one.